Christine, quite simply, how significant is this for the Saudi stock exchange?
Well, it's pretty significant in that this is really about the direction of travel, Jumana. So the Saudis are moving toward a full liberalization of their stock market. So what we've seen with these latest moves is essentially that the kingdom is saying, hey, now all types of investors can come and invest in this market. It used to be that there were layers upon layers of criteria that investment managers would need to meet to invest in the stock market, including having assets under management of $500 million. Now that is no longer the case. And the reason this is so significant is because this Capital Market Authority has said that this was the first step in a series of steps that need to be taken in order to allow foreigners to then own a majority share of a Saudi company. So currently, foreign ownership limits stand at about 49%. The CMA has said that once this move was out of the way, it would then undertake a review this year, which could pave the way for foreigners to own more than 49% of a Saudi equity. So investors were really looking for this as the next step in that pathway. So really what we will see now is that investors will probably become a bit more focused on these reforms. And that should be welcome for the Saudi stock market because we're seeing Saudi equities come off of their worst year since 2015. So any kind of a boost would be a good thing at this point.
Yeah, most definitely. So we've had the easing of some of the requirements, then potentially talk about lifting the foreign ownership cap, which is something we spoke about towards the end of last year. Christine, it's also very early days of 2026, but I want to talk to you about the borrowing that Saudi has undertaken just in the first couple of months, first couple of days of this year. Already, we're seeing quite a big bond issuance out of the kingdom. How does this set them up for the rest of the year?
Well, the Saudis typically love to come out with a bang at the start of the year when it comes to issuance. What we've seen in the last couple of days is $11.5 billion raised in dollar bonds. And then additionally, there was a $13 billion syndicated loan that was done as well in order to back infrastructure projects. So already 7 days into the year, we've seen that the Saudis have raised almost $25 billion in financing. That is more than 40% of the overall expected financing needs for the year, which stand at about $58 billion.
Wow.
So we're once again seeing that Saudi is kind of front loading their issuance. The key thing to watch in the months ahead will really be whether they continue to tap international markets at a rapid pace or pull back a little bit, as they have indicated they're looking to slow down, and also that they will increasingly turn to private markets as they look to diversify their funding sources.
Yeah, but that is quite an astounding number. 40% of borrowing has already taken place in the first couple of days of the year. Why are they borrowing so much? Is it on back of some of the requirements for outlays at these mega projects, or is it simply in response to lower oil prices and the pressure on the budget that imposes?
Well, I think it's a combination of factors. The government has made no secret that it is borrowing and will continue to borrow to plug its budget deficit. Last year, we saw quite a pickup in the budget deficit to 5.3% of GDP. That is expected to come down to 3.3% of GDP this year, but you're still looking at quite a wide gap. And really, that gap is a combination of things, which is the elevated spending on Crown Prince Mohammed bin Salman's $2 trillion economic diversification program, and also the fact that we just continue to see subdued oil prices that are far lower than what the government needs. So it's that combination of elevated spending, lower oil prices that are coming together to create a fiscal gap that the government needs to fill.
Yeah, Christine, great to have you on, and thank you for walking us through all Saudi developments as it pertains to capital markets and borrowing so far this year. Christine Burke, our Saudi bureau chief.